On, let's also welcome on board Arindam Mandal, who is the head of global equities at Marcellus. Hi, Arindam. Good to be speaking with you. The announced tariffs are much more severe than anticipated. While the Indian markets have seen to be climbing the wall of worry, but Arindam, give us some sense that how do you pencil in the market movement in the short term as well as what's the medium term outlook, because for now, though we have the clarity a bit on the tariff announcement, but we still are looking forward to the Q4 updates, to the earnings update as well as the RBI monetary policy as well.
Absolutely. Happy to be here. Thanks for inviting me. So yeah, absolutely right. A lot of uncertainty and definitely the tariffs that actually came through, or I should say, the peak tariff that you're talking about, that is actually much higher than what we anticipated, what the street anticipated. In fact, we are looking at a effective tariff of around 15%, 16%, but looks like what you got is around 25, 28, 8%, something like that. Right. So again, if I look at different markets, I think the impacts are very different. India, thankfully, on the probably on the less severe side of the implication, the negative implications, and you can see it in the market, right? It is actually holding up pretty well, barring IT. Um, Other markets, I mean, if you look at any other markets, say Europe, China, or many of these EM markets, actually, they are much more driven by exports compared to what India depends on. So from that standpoint, I would say, India is actually on a relatively good shape. Especially you can see, the currency is also stabilizing at a very nice 85, 86, which is again great. The important thing is that the currency has to be stabilized, at a certain pace. We have to acknowledge the fact that we are a relatively higher inflation country. So from that standpoint, I think India is a relatively better stage, better situation. If I just talk about the tariff impact, right?
Arindam, hi, good afternoon. This is Ankita also joining in. While yes,
Right.
as you rightly pointed out, India remains rather relatively in a better position, but really can India remain insulated because tariffs will act as increased taxes for the consumers in the US, and that could lead to inflation. Now, when that happens, when the demand goes down as a result of that, it will impact other economies as well.
There is no doubt. I mean, US is the whatever happens in the US, it will have big implications for the other countries. There is no doubt about it. In fact, if you think about it, what can happen to the US GDP forecast that we have, I've been seeing numbers around 50 to 100 basis point of GDP downgrade, GDP growth downgrade for the year, right? If the tariff goes through as the numbers have been pointed out by White House. So yes, so if that happens, I mean, there will be a multiplier effect on different sectors, and that will have a ripple effect on, as you said, on many other sectors which are not directly impacted by these things, right? So again, there is no doubt about that. I'm just talking in terms of relative basis, right? So India probably in the market outside of US, India is probably much more insulated from that standpoint. But look, I mean, the worry against high valuation, etc., that doesn't go away for both US and Indian market, right? So again, I'm not saying that it is all clear for India, but I will say that I'm looking at all the countries across the globe, all the large economies. I think that India is in a kind of a better shape.
All right, but Arindam, also give us a sense that which are the sectors to be with at this point in time, and along with that, give us some sense that which are the sectors you are wary of and would suggest that one should just stay away.
Well, if I look at India, look, I mean, we are a little bit cognizant on the valuation side, right? So we are still kind of okay with the banks, the pharma, etc. And of course, pharma is kind of exempted, so they kind of I'd say survive the wrath of tariff. So we are looking for earning certainty. We're looking for companies which can show some earning inflection. And there's which the sectors which have some kind of valuation support. So I think banks, the financials, and the pharma kind of very polar opposite if you think of them characteristically, but we are kind of very confident on those two sectors per se.
Right. Arindam, tell us, what about the financial space? The financials, especially the banking names. Do you see a valuation comfort there now that they've corrected fair bit? The valuations are right, and also now if the interest rate kicks in, it's a big positive for the banks. How do you see the financial theme play out now? And it's a common consensus. Everyone has been talking about financials. What's your view?
Yeah, we have been actually very positive about financials for almost a year now. In fact, quality financials, I'm talking about like the laggards, the mega cap laggards, like say HDFCs of the world. I would say the valuation, they caught up a little bit from that standpoint. But again, we still feel that, in a kind of situation where the macro is slowing down, and especially as you said, the rates, there can be a rate cut to stimulate the economy, etc. So there are, the high quality financials, we're still quite comfortable owning them. So yes, we are on a relative standpoint, we're definitely much more bullish on financials compared to many other sectors where we still see that the valuation froth, it still exists even after the correction that we have seen in first 3 months.
But Arindam, give us some sense on how do you project the fund flows to happen? Because I remember in the second half of the last calendar year, China was one of the attractive destinations. Then in the first half, what we have seen in the last 3 months is the European markets turning, some bit of pockets were turning to be a bit interesting. But now that we have some announcements on the tariff, well, yes, uncertainty still prevails. How do you see the fund flows flowing, and do you still believe that the goal will continue to be the safe haven?
Look, the steady money flow, I don't think their direction is going to change very soon because, the valuations, as I said, kind of still not in a zone that you can actually take a big bet on, say, the growth countries like India or US. But having said that, the money flow that happened in Europe and China, that was kind of probably more driven by valuation. In fact, if you look at what China was trading at beginning of last September, it was trading at around 9-10 times P vis-a-vis their longer term average of around 12-13. Similarly, coming when it came to this year, the Europe was trading at around, I think, 12 or 13, and their long-term P average is around 14.5, 15, right? So right now, we actually have closed that gap that used to exist in terms of valuation. So I think the valuation argument, the pure valuation argument has probably lost its steam to some extent. Now we need to actually look for the places where you can get good earnings delivery with certainty, right? So from that standpoint, I mean, given all the uncertainties, I think there will be still some, money flow will go to the safe haven assets. Like you can say it is, gold is going higher and higher. Bit worrisome at this price, but I can see why it is going up.
Right, Arindam. On that note, thank you so much for taking the time out and joining us on the show.
No, thank you.
All right.
If you like this video, then like, share and subscribe to ET Now.